Hello everyone, Mitchell with Option Wolf here. Today I wanted to cover Fibonacci Retracement. It's a very important tool that we use a lot. Just brief history, I'm sure you've heard of the mathematician Leonard Fibonacci, who developed the Fibonacci sequence 0, 1, 1, 2, 3, 5, 8, 13, and so forth. Now, we use what's called a golden ratio, and it's created by dividing one of those numbers by the number that follows. That golden ratio used is 61.8% in the stock market. There are multiple ratios that are used by technical analysts, but these ratios are going to be 23.6%, 38.2, 50%, 61.8, which is going to be the most important one, as you'll see in a moment, and 100%. So basically we draw this tool, and I'll show you in a second, but a stock's trend tends to retrace once it hits one of these key ratio points. And basically we want to use this tool to determine what's the best place to buy and sell. So the way we do this, and we're just going to eyeball it for the purpose of this video, you can get it exact in this platform, but what you want to do is take that high point and pull up your Fibonacci retracement drawing tool, click there, and drag it on down to the low point here. It's about right there. So as you'll see, we got these ratios. We got 0%, 23.6, 38.2, 50, 61.8, 78.6, and 100. You might already notice these patterns here, but basically these are the lines in which we expect to see reversals or trend changes, with this one being the most important, the 61.8, because it's that golden ratio. So the way this works, let's say we see it trend down from 38.2 and we see it hit 23.6. We may expect it to trend up. In this case it did not. Now it's back down, it's down here at 0, so we can expect it to retrace perhaps up to this point. Now, as I've said in many other videos, it is important to use other momentum tools such as MACD when trading this to determine a good entry or exit point. Like I said earlier, so this one right here is going to be the most important. This is basically the inverse of the golden ratio. So it tends to be the maximum pullback zone for some reason, where if that fear starts climaxing and final sellers are taking profits, and they're like, okay, well, that's good for me. And as we see in this chart, it's not always going to bounce exactly off of those lines, but it just took a pretty good dive here once it hit that point. And we're looking at a 30-minute chart right now, so this is just over the course of about a week. So in using this tool with whatever time frame you're using, it may be wise to wait a few candlesticks just to confirm your trend, and like I said, use it in conjunction with another tool. But I think this kind of speaks for itself. You just see you see bounces off these lines, if not directly off them, then very close to them. Right here's a big one. Some consolidation here, and then a drop. It tried to bounce here and then decided not to, and then retraced all the way to this level and then bounced back up. So I recommend using this tool. You can draw multiple ones across multiple time frames, but all you got to do, like I did earlier in this video, is click that high and then come down here. You don't have to drag it, just come down here and click the low. You can adjust this price to make it exact, and this is also a good tool if you want to set a stop price or something along those lines. But this is another one that I highly recommend using, and if you haven't before, then get on and mess around with it, and maybe you can use it to begin trading.